Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is January 12th, 2026, and I'm thrilled to welcome Andy Schectman to the program, an expert in the gold and silver space and the president of Miles Franklin Precious Metals. Andy told us to buckle up last time I had him on in November because silver was headed much higher, and he turned out to be prophetic, but he thinks we're still in early days for the metal. As China puts a squeeze on exports, the LBMA scrambles for inventory, and the price spreads between East and West are starting to allow for true price discovery in the silver market. We also dive into gold and where he sees it headed in 2026. Fed Chair Jerome Powell being under criminal investigation, the end of U.S. hegemony, and so much more. If you love silver, get your commodity culture. Stack silver, not fiat t-shirt. Make a statement on sound money in style using the link in the description below. And now, my friends, strap yourselves in for my conversation with Andy Schectman. Andy Schectman, it is great to have you back on Commodity Culture. The last time I had you on this show in November of last year, silver was around $50, and you said to buckle up because prices were going to go much higher from here. Well, you have turned out to be absolutely right. We sit at around $85 an ounce here, once again hitting new all-time highs for silver. Give us your thoughts on silver's incredible run and your forecast for the metal here in 2026.
Jesse, first of all, happy and healthy New Year, brother, to you and your family and everyone out there. It's good to be back. And, you know, when you have the stupidity or the courage to say what you believe, it's also good to have been proven right. You know, I don't have a crystal ball. When I said buckle up in November, it wasn't because of a chart pattern. It was because you could see if you look closely. If you open your mind to looking and seeing outside the box, right, which is something I've always really found easy to look outside the box. And, you know, growing up in high school and college, it maybe didn't always serve me so well, but in the big picture, I think it does. And I think you have to look outside the box. Conventional wisdom in unconventional times serves you wrong, in my opinion. Anyways, you could see that the paper price and the physical reality were on a collision course. I mean, look, let's just first zoom out for a minute, okay? So silver didn't just drift higher. In my mind, it's repriced. It went from the 20s and 30s early in the year to, you know, now into the 70s and now into the 80s. That's really not normal for a market that is this critical. But what I would argue, Jesse, is that price suppression always ends badly, period. You can only manipulate a market or push it in the over a long period of time, push it in the direction that it is going. And you have some very strong forces pushing against the price suppression. Let's talk about policy shift for one moment. You now have the U.S. moving silver into the critical mineral category. And this frames silver for national security, not just as a collectible metal or a monetary metal. Response to that, the massive choke point. China tightens the gate on refined exports. And this matters because they are responsible for 70% by most sources of refining the doré bars that come into the market, come into the West. In my mind, this is about ownership more than anything else. It's about physical ownership. Now, when I look back, I would have said that the central bank's buying and the fact that there's no counterparty risk, all of this stuff was big, right? But COMEX is telling you the truth right now. And if you want the real story of what's going on, and it's very easy to see this, is in fact, it's really the only thing that I focused on, truthfully. A standard COMEX contract is 5,000 ounces silver. Gold is 100 ounces. But when you see sustained, now this is going on 15 months now, 16 months, outsized delivery demand on COMEX, what you're really watching is a fight over the real inventory, not just speculative paper positioning. And let me just try and explain what I mean. In December, there was 3,706,000 ounces of gold delivered. I mean, as big as it gets, but 64,730,000 troy ounces of silver issued or and stopped. Issued and stopped is a fancy word of saying delivered. Now, not all of it leaves COMEX, but a lot does. So let me ask you a question. Who the hell's got, and that's an all-time record for the month of December, who's got money to buy 65 million ounces of silver? Let's let that sink in for a second. But this is every single damn month since November. And what really pisses me off about all of this is there is no mainstream acknowledgement of any of this. Go turn on the news tonight. Watch silver ripping to all-time highs, and you won't see a word about it. And where is the journalistic integrity in the idiot Jim Cramers of the world who would say, who's buying 65 million ounces of silver in the month of December? And I'm sure he didn't talk to us about the critical mineral designation or the fact that China, the massive refiner, said we're going to limit exports. But if a mint box of Silver Eagles, which is 500 ounces, weighs 42 pounds, who just took possession of 65 million ounces? Let that sink in for a minute. Now, January, Jesse, is not a scheduled delivery month, but you can still take delivery. But here's where it gets crazy again. Supporting the only thing that matters, right? The most well-funded, well-informed traders, the most well-informed traders in the world are doing this, right? They don't do this, pardon my French, for shits and giggles. I don't mean to be profane, but I want to be profane so that it sinks in. This is all you need to see, right? Forget about the noise. Forget about the rhetoric. Forget about anything. When the most well-informed traders on the planet, now I've been talking about the central banks forever, but who's doing it here on COMEX? Stand for delivery every single month since he was elected last November. This is 4 feet of snow in Death Valley in July, how unusual it is. So, at this level, Jesse, delivery is the only message. And so for 2026, I expect higher volatility. I expect Oh, by the way, did I mention? Yes, I did. I did mention how much that was. Maybe I didn't. So for January, for the first 3 days, we've seen already, just in the first few days of the January delivery, 6 days, 7 days. Last I looked, last week, Friday, we saw 33.45 million ounces of silver delivered just in the first few days of January. So that's almost 7,000 contracts delivered just in the first few days of a non-scheduled delivery month. Who's doing this? That's all that matters. So yeah, I do expect higher volatility. I think a market that increasingly trades on availability, not just price. We've seen a backwardation, constant backwardation, which means that there's more demand for it right now than I'm not going to trust you into the future, which is supposed to be the opposite. You're supposed to see a higher price into the future because it takes into account interest, cost of money, storage, all that stuff. No, I want it right now and I'll pay you more for it because I don't trust you that I'm going to get it. And I want people to remember one thing. I don't sell gold and silver to become wealthy. I sell it because it is wealth. I've said this a million times. The wealthiest people in the world own lots of it. So sure, you own enough of it, you'll be wealthy. You do not buy it to become wealthy. However, when you think of where this can go, silver is just a tiny little market relative to the capital that can and is flooding into it. When that happens, Jesse, the move can be fast and quite disorderly. So in short, I would say the buckle up still applies, brother.
Well, triple digit silver feels like a certainty at this point. The chorus on social media certainly is growing louder. But then again, it's often when market participants are the most euphoric and have the most confidence that the tide can turn in the opposite direction. Do you think some caution is warranted here? I mean, there's some people, particularly using technical analysis, that point out it could be overbought. even by fundamental metrics. I was talking to Johnny Kovacevic on the show not too long ago, and he said he thinks silver will get to 100, but once it gets there, he expects a sharp pullback as profit taking occurs. What are your thoughts there? Or do you think we could be in a new paradigm here where we're just getting started?
Well, first of all, I'll say technical analysis is good, but in a rigged market, one that has never been allowed to find real price discovery, I would say it will do nothing but mislead you. No disrespect to the technical analysts, because it's a very valuable tool, but technical analysis, I think, also assumes a fair and orderly, free market. And when you have a market that's been suppressed for as long as this one has, I would caution people to rely too heavily on technical analysis. However, you're right, absolutely. Some caution is always warranted, especially after a move like we've seen. And when everyone starts talking about something as a certainty, that's typically when the market reminds you that it doesn't care about your conviction or what you believe to be true. But that said, I would separate price risk from thesis risk. I mean, in the short term, yes, silver can absolutely pull back. It's a thin market. And after any vertical move, you can see what they would call a sharp air pocket, where profit taking comes in. As Johnny said, margin pressure that we've seen recently, headline risk, yeah, it's a top, it's overbought, all of that stuff, you name it. But a $10 and $20 correction in silver is not only possible, it's normal in a bull market. You know, people are thrilled when it goes up $8-10. Well, we haven't really seen an $8-10 move, but we might today. It's up $6 already. But these types of corrections is normal. But it's the underlying conditions that I want to remind people that got us here. Tight physical availability, massive delivery demand by the most well-informed and well-funded traders in the world, critical mineral designation, mineral wars between nations. It's not two brothers trying to corner the market like it was in 1980. And what you see is massive delivery demand in a paper market that's been asked to settle real world demand in real metal that it probably doesn't have. That's a problem. And so, yes, if you're asking, could silver drop next week? Of course. I'd actually be surprised if we didn't get a violent pullback along the way. The bull wants to take as few of us along as possible. That's why no one really ever succeeds in investing. Most don't. This is why they have wave theory, Elliott wave, Kondratiev wave, which speaks to human emotions driving the market, fear, exuberance, panic, all of these things. But this is why if you separate yourself from the herd and see the reality, where a pullback doesn't change the bigger picture. And in fact, I would argue in a market like this, a dip is a gift, because this dip would be driven by positioning and leverage and not by sudden surplus of silver, right? So my advice is simple. Don't get cute with timing. If you're a trader, trade it. And that's what the technical analysts are. They trade, right? But if you were trying to protect your purchasing power, to me, the risk isn't that silver goes from 80 to 70 for a minute. The risk is waking up in a market where you can't get what you want at any reasonable premium, and the price you thought you'd be able to buy it at is gone. So yeah, short-term caution, sure, yes. Long-term conviction, also yes. And in my opinion, both can be true at the same time, and in this case, I think they are.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Talk to us about the big difference in spreads between the price of silver in West and East, with the Shanghai prices staying pretty consistently above Western spot and futures prices. What are the reason for these spreads in your view? And is this a sign that true price discovery in the silver market is starting to occur?
Super good question, Jess. I mean, because to me, that's one of the most important tells, if you will, for poker parlance in the whole market right now. When you see the Shanghai Metals Exchange consistently pricing silver above Western spot and futures, It's basically the market screaming that the metal is worth a whole hell of a lot more, not only where it's needed, but from where it is being financially priced. And it's the market's way of saying you're full of crap, COMEX and LBMA. And the Shanghai ecosystem is far more tied to real metal moving to real end users, industrial fabrications, wholesalers, et cetera, where the West sets the paper price largely through leverage paper futures that is now beginning to be viewed as fugazi. The widening spread that we see is a signal of tightness. And it's not a rounding error, man. And it's perhaps the beginning of real price discovery for the first time ever, right? Because silver has never been allowed to find its real price discovery, because I don't care what anyone argues with me on. It is my belief 1000% that it is the military industrial complex of the West that needs silver for high-tech weaponry, period, that has suppressed the price. And it's not just the United States, it's all of the Western military, France and the United Kingdom, and all of the strong militaries across the Western world that have used military to, in essence, rule the world for a very, very, very long time. And it's not even about the price of it going too high, because it's inelastic. You need just a little bit for a very high-priced piece of military equipment, but you need it. And if the world figured out just how valuable it was, well, that would be a problem. So if the West and the military industrial complex wants to rule the world, sell all their weapons, not just to the West, but through the NATO allies, and then continue this. And then, of course, when you see countries getting blown up with said missiles, who gets the reconstruction contracts very often? Well, it's BlackRock, which is a military industrial complex. And it's just, you have to take a step back from conventional thought and wisdom and the people giving you advice maybe don't see the world quite the way that you do. And I'm speaking to all of you out there. And if all these, your financial advisors say you're crazy and why would this be true? Because the people that are doing this don't see the world the way that you do. And we've been right. Us watching this show, we've been right. And it's about time that we get some acknowledgement of it from the financial media. Saying, geez, we were wrong. Well, that isn't going to happen. Anyways, I would say it like this, man. The East is doing price discovery in the physical, and the West is still doing price discovery in the paper. And the spread is what happens when those two worlds stop agreeing. And if this continues, especially if it widens, and the early stage evidence is that it is widening, the physical market is starting to overrule or override the paper market, period. And when that dam breaks, the move often, I would think, isn't polite. It'll be chaotic and maybe even disorderly.
What is the current situation with LBMA silver inventories? Because we've seen a lot of reports over the last few months that they've been running out of physical silver and delaying deliveries. To your knowledge, has that situation been resolved, or is the LBMA inventory situation still under stress at this point?
I don't know if you've had David Jensen. Have you had David Jensen on your show?
I have not. I've reached out to him to get him on the show, so hopefully we'll do that.
I had him on mine, and he's an amazing, amazing mind, and no one knows the LBMA better than him. But I would argue, after talking with him a few times and reading his stuff and digging as deep as I can, that the London Metals Exchange holds virtually no physical silver, at least relative to, according to David, the 2 billion ounces of cash spot market contracts that could stand for delivery for immediate silver bar ownership. And I mean, as far as I'm concerned, the stress in the LBMA, it shows up not in the cost of the metal, but it shows up in the borrowing costs like we're seeing, or the leasing rates. A lot of people don't know, but you can lease silver for whatever reason, to cover contracts or to fulfill obligations or whatever you need. You can lease silver, and normally the lease rates are sub 1%, right? Less than 1%. But what we're seeing now is 7, 8, 9%, and it was as high as 30% a few weeks ago. But that's exponentially higher than it normally is. And if you're a real buyer trying to source size in London, what we've been told all year is it's 8 weeks delayed. Sorry. where there's a shortage of manpower and trucks in London, which is just the biggest bunch of crap I've ever heard in my life, because they're a T+1 settlement market, where T is trade plus 1 is settlement, and the next day those bars should be moving. But listen, Bank of England has a little bit of shortage of trucks right now and manpower. So, Jesse, I know you need your bars, but 8 weeks, bro. Sorry. And I think it seems like because of this stuff, we're getting closer to that moment where the metal left inside the vault is not the metal that's actually for sale. And David would tell you that they have like about 800 million ounces of silver there, of which almost all of it belongs to the ETFs and supposedly and other holders, that it's not for sale. And he would say there's about 140 million ounce free float, but he will question that too. He'll question that, is that free float really a free float? He thinks most of it is encumbered. But once this becomes obvious enough to players, not just guys like you and I asking these questions, or David Jensen, or the pimple on the elephant's ass that is reading all and listening to us, and I mean no disrespect because it's a growing crowd, but the mainstream has zero idea because of the lack of any measure of journalistic integrity across the mainstream. But once people start to understand this, and I don't know, to me, price discovery doesn't happen on a screen. It'll happen in the real world. And again, talk about disorderly. It will get disorderly fast once the mainstream understands that this game of metal suppression is ending, and ending badly.
Starting January 1st of this year, China has implemented export controls on silver, requiring companies who are exporting the metal to be on an approved government list. I believe so far we have 44 companies that have been authorized to export silver this year, but this certainly does potentially put additional constraints on an already tight supply. How do you think this move could impact the supply-demand dynamics for silver?
Yeah, you're right. It is a tight supply chain, and this is a tightening of the valve. And especially for a market that runs at just-in-time inventory, it can get potentially very interesting. It can get very interesting. So the Chinese, what's it called? Chinese Ministry of Commerce published a white list of 44 companies allowed to export silver, and anything outside that lane is effectively shut out. There were many, 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 many small and mid-sized refiners that would send metal out into the West, and those are done. And even those approved evidently face like a big additional licensing step, which means more time and cost and paperwork, and Beijing can slow things down whenever they really want. One of the things that people missed about this, to me, first of all, China refines 70% of the doré, right? And so those that were approved are state-run, and the state did something in November that not a lot of people talked about, and that was that they came out with something saying, we are going to prioritize exports for domestic necessity, for domestic demand. And that was quiet. But in essence, what they are doing is basically, in my mind, they're prioritizing domestic supply. And this is going to raise the risk premium, which basically means, am I going to get it, right? And the uncertainty widens spreads, right? And so this is why you see lease rates going higher, and rates and borrowing costs, as we are seeing, are indeed accelerating. And I think it will also accelerate industrial stockpiling by locking in supply, which will tighten the market further. In other words, who the hell is standing for possession of all of this metal? 38 million ounces just in the first 6 days of the January non-delivery contract month, right? And the 68 million or whatever in December all-time record. I wonder, could it be someone like the U.S. government, now that it is a critical mineral, stockpiling? Could it be Tesla, Samsung? We were already told Samsung went to Mexico. As I've been saying on your show before, China's been doing that for 2 years, going right to Mexico, the number one producer, China's two, and to Peru, the number 3 producer, and buying up all their doré and concentrate, paying double what the West will, shipping it home and refining it. Well, Samsung just did that themselves. you are seeing a disintermediation of the market. They're going right to the source, buying doré concentrate, which isn't reportable, which isn't verifiable in terms of purity and in terms more so of how much. I think the takeaway for investors is the same. When a government turns a commodity into something strategic and adds another government, adds licensing friction, supply becomes more political, maybe much less available. They call that elastic. And in a small market like silver, it doesn't take much to create a big price response. Oh, you do not buy it to get wealthy. However, you're looking at a once-in-a-generation type of thing.
Well, shifting to the gold space now, once again, we have hit all-time highs as well today. The metal's been showing tremendous strength. I think it's been a little bit overshadowed by silver. Silver basically more than doubling gold's performance over the course of 2025. Do you expect another leg up here in this gold bull market this year? And what are the main catalysts driving the metal right now, in your view?
I do. Again, the only catalyst, in my opinion, is what's happening on COMEX, because it's the clearest tell of all. When you see massive physical delivery demand, especially showing up in places it normally doesn't, like COMEX, we were net exporters forever, and now, in my mind, we're importing more than anyone in the world. And since November, I mean, again, where is the media? Every single month, millions upon billions upon billions upon billions upon billions upon billions of dollars. I don't know how many times I need to say this to wake people up. Is coming into COMEX. I've been screaming this for months. That's all you need to know. The people at that level who got that kind of bread, do you really think they're guessing? Do you really think they're guessing on where this is going? When the BIS reclassified gold as tier 1, high quality liquid asset, do you really think the central banks who've been buying hand over fist since 2017 were guessing? The people at that level know the playbook. And I think, the big sophisticated money doesn't give a crap about price. They want, deliver me the metal, period. And they are insisting on delivery. When they insist on delivery, it tells you that this isn't that the paper price doesn't matter anymore. It's about ownership. And when you add in the math of our debts and our deficits, which must mathematically force some form of a policy response over time, this is one of the reasons the central banks have been buying, and the no counterparty risk, no freeze your asset risk that gold provides, sitting outside the system. I don't know. I just think that you'll begin to see more money rotating into this type of mentality, which will accelerate the move. So I don't know. Yes, I see gold continuing to march decidedly higher quietly. Silver will get most of the publicity, but gold is still going to, I think, end the year much, much higher than it did start it.
And I didn't have this question prepared, but it is breaking news, so I would like to get your thoughts on Fed Chair Jerome Powell basically filming a hostage-type video where he said he is now litigation is being presented against him by the Trump administration, supposedly to do with something with the new building or renovations on a building that they were doing. However, Powell in that video stated he believes this is actually political pressure from Trump because he has refused to lower rates as the president repeatedly requested this to be done. It looks like Trump is going to be installing a new Fed chair. The next Fed chair is probably going to be a puppet that will do whatever he wants. At least that's the impression I get. And so rates will likely be lowered. So I'd love to get your thoughts on both those things, the Jerome Powell hostage video and the implications of this, and the possibility of a new Fed chair lowering rates and what that could do for the gold price.
Well, in and of itself, that will boost the gold price significantly. There's something called Gibson's paradox, the inverse relationship between real interest rates and gold. And I don't think the big players give a crap about that anymore. But the mainstream media, who's lost all credibility, or the financial analysts on CNBC who suck and don't tell anyone what's important, or the Jim Cramers who told you to sell your metal months ago before it started to take off, they all suck and they all should leave, right? And you and I should take their place. At least we would speak real information. They'll be the ones saying, well, with interest rates falling, that should be the tailwind for gold. If I hear that again, I'll puke, because it really has nothing to do with it, but it will get the retail public more interested in it, because they're financial advisories who will tell them to buy GLD and SLV who know nothing about what's happening. Yes, they're very astute. They've learned more and more about less and less till they're experts on nothing, focusing through this little pinhole on equities and bonds, probably not even realizing that the chief investment officer of Morgan Stanley said, sell half of your bonds, the 60-40 rule that Wall Street's used, it should be 60-20-20, sell half your bonds and buy metals. Or Michael Hartnett, the chief analyst for Bank of America, said, no, 25%. Or Jeffrey Gundlach, the bond king, no, 25% of your assets in metals is not overbought or too much. They don't get it. But what I'm really saying is it has nothing to do with interest rates, although it will wake up the mainstream. Now, as far as Powell, and look, Goldman Sachs came out and said if the market believes that the Fed has lost independence, gold will go to the moon. Well, I would argue the Fed lost independence a long time ago. Why? I mean, you go back through every presidency, there's some sort of back and forth, but not like we see now. But why? Who's Stephen Mirren? Stephen Mirren is the architect of the Mar-a-Lago Accord and Trump's advisor. Where is he now? Oh, that's right. He filled one of the vacancies already at the Fed. So when we talk about where this is going, this is another reason why the world will de-dollarize. This is another reason why gold and silver will keep going higher. They want to drive rates down. And look, no disrespect to President Trump, I'd vote for him again for his policies. However, it is suppression of interest rates that got us in this problem to begin with. It has distorted asset prices forever. But that's what they want to do. They're going to debase the dollar. To their credit, the idiots on mainstream media actually talk about the debasement trade. Way to go, guys. But they missed the whole point with it. They are trying to debase the dollar not only to make manufacturing, or not only, excuse me, I just gave it away there, not only to make paying off the debt easier, but I do believe if you followed some of the stuff that I talk about and go deep into, they want to bring back manufacturing. And it's a very difficult task, but the first thing you need to do, besides reshoring all the gold and silver, which is part of my thesis, is to debase the dollar. How do you do that? You let gold go much, 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 much higher, which is the real barometer of the health of a currency, which also devalues the dollar more and more and more and more. You lower interest rates and the dollar just keeps on falling. And I think it's the end of the dollar as the global reserve currency by design. We can talk about that next time, maybe when we see each other in person at VRIC, and maybe we can do a little interview on that. But the bottom line is the Fed has lost all credibility once this move happens, because it is now tied, in essence, to the Treasury, tied to the government. And I think the markets will react violently to that once it becomes obvious. It already is obvious to me. Maybe that's why the market is quietly acting violent. Like today, people don't see it, but the market sees it long ahead of the price.
Well, I just want to comment quickly on the Jim Cramers of this world and the CNBC analysts. I think they work for Wall Street to essentially attract the so-called dumb retail money into the trades, because Wall Street's on the other side of those trades, and it's a big money-making machine. It's a racket.
Wouldn't you say that is highly unethical and immoral in that case?
Oh,
okay,
yes.
Good.
Absolutely. And I cannot imagine Jim Cramer is actually as stupid as he makes himself out to be. That cannot be true. But let's shift to the realm of geopolitics for a quick second here, because the world sure is changing fast. And with Trump at the helm, it seems like the U.S. is back in full hegemonic power mode, invading Venezuela essentially and arresting Nicolas Maduro, now threatening Greenland. It looks like that's something that Trump very much wants, whether that's going to come about through a financial transaction or whether America's just going to set up shop there and say, what are you going to do? I don't think the EU has any power to really stop that from happening. Things are heating up in regards to Iran. Trump has been tweeting that, or on Truth Social saying that, we stand by to help give the Iranian people their freedom, which is kind of means that we're going to potentially take action against Iran. This is all potentially increasing the geopolitical risk premium for safe haven assets such as gold and silver. But do you think these moves from the US will accelerate the BRICS alliance and weaken the dollar on the global stage?
I was listening to Gerald Celente the other night, and he had an interesting comment. He said, "Can you only imagine if Putin and his special ops went in and kidnapped Zelensky and his wife, or Xi went into Taiwan and captured the president and his wife? Oh my God, the outrage that we do it and people clap. I mean, I think that there's no question that Russia and China will use moves like we've seen as proof of a far more coercive and dangerous U.S. And will respond by, in my mind, further reducing their exposure to United States leverage and hegemony. And I think it's more proof to their partners in the global South to frame Washington as the destabilizing force, not the force of truth and liberty and democracy. It will expand local currency settlement through the non-SWIFT plumbing, like we've talked about, the SIPs of the world, or even ultimately the Enbridge and the unit, which has actually been now moved to operational. I think it will create more commodity trade, settled issues or platforms rather outside the U.S. dollar, and more central bank diversification. Look, I don't know. This is how dominance erodes, little by little, as my podcast goes, slowly then suddenly. Take your pick. And I think, this is a loss of confidence event, period, globally. And I don't think it will do anything but continue the move and the consolidation and the safety in numbers with the BRICS partners. So, look, you see what happened in Venezuela, right? And we talk a lot about that. Obviously, they have the largest known oil reserves. They also fully applied to BRICS and wanted to sell their oil for yuan. Now, I'm not saying there's a correlation here, but all of a sudden, we get together with the supposedly the government of Nigeria, who has also fully applied to BRICS and is I guess they call it observation partner. They're a junior partner in BRICS already. They're also the largest producer of oil in Africa and start bombing ISIS inside of Nigeria. Now, they were doing it supposedly in coordination with the Nigerian government. Point is there coincidence that we're getting involved in a place like Nigeria? I mean, why? Celente says, listen to the farewell speech of George Washington, and where he says, do not get involved in all of these foreign entanglements. Well, we're frickin' everywhere, including Iraq, where we invaded them 22 years ago and never found the weapons that we invaded them for. And we're still there, occupying their country to a degree. So when we talk about being all over the world, from Africa to the Middle East to South America, and now aspirations on Greenland and all of these things, at some point, you start to see history repeat itself. Are we the Romans who expanded their military all across the globe when they were broke and insolvent, kind of like we are, and ended up being the end of them? I don't know, but I will tell you that I don't think the world, especially those that really don't particularly love the way that the U.S. has run things for a long time, I don't think they like it. And I think it does give more fodder, if you will, for an expanding BRICS unit, for sure.
Well, Gerald Celente is going to be on this show this week, Friday, so I'll give a little plug for that. We'll talk about all those things with him as well. I want to end on the political division in America, because we've spoken about that before and how extreme it's gotten. It seems to have accelerated, particularly recently with the shooting of somebody by an ICE agent. There's a lot of back and forth on social media, people defending it, people attacking it, but at the end of the day, it is creating more division, whether you agree with ICE and what they're doing or not. Do you think America can hold itself together as a nation here moving forward, or are we coming to a time where perhaps it splits into different countries as divisions become too untenable to resolve politically?
I've in this space, I was very consistent for the last several years, speaking at least under the previous administration. I would say what we were doing was too stupid to be stupid. With all of the wokeness and the issues with election integrity and the judicial system and the immigration system and the lack of meritocracy for lifestyle, all that crap that drove me nuts, and it's still here. And I understand to a degree it's still here, right? We've moved away from it, but there's still this a massive divisiveness and dividedness, and we are. I understand why it feels like we're sprinting towards that break, like a country coming apart, even if the flag and the borders don't change, so to speak. And I think if, for me, the things that I would watch for would be sustained political violence or normalization of it. Like my home state, I moved out of Minnesota 5 years ago. We've had a satellite office in Florida. My corporate office is still there because it's the only state in America that regulates a federally non-regulated metals industry. So we're held to a higher standard, but I left because I wanted to get the hell out of there. And then when I watch the mayor of Minnesota get on national TV and say, ICE, get the F out of our state. In essence, what that is doing by normalizing this type, and it is political violence, where they're, pushing back against a branch of the federal government who is coming in there and upholding the law, period. And all that does is create this break. And I don't like it. And you're seeing even constitutional issues, legitimacy issues, where, perhaps where large blocks of the country don't accept election results. So you can see that kind of already. And this big one, I guess, to me, it's the non-compliance between states and the federal government, and that becoming routine. And I see that in my old home state of Minnesota constantly. I watch their politics, and the stuff that I see there is nauseating to me, truthfully. Like, I grew up in a house. It was like that 70s show, right? And, I'm a kid of the 70s, and I would argue my parents were hippies, and I had an older sister. And the stuff I saw in my house expanded my mind from a standpoint of, lifestyle. And I'm all good with that, right? But, what we see is not what a liberal was in the 70s, which was sex, drugs, and rock and roll. And now it's completely shifted from that. And quite frankly, it's become frightening in terms of its radicalization, that they always used to point to the right. And I would argue that there's radicalization in the left, and even more frighteningly so to me. But it's this huge spread. Look, I don't know. I mean, can America hold it together? Yes, I think it can, and probably will in a formal sense, Jesse. But the real question is, can it restore enough shared trust with one another to function well? Because that's the bigger risk, right? And now it looks less like 50 states and looks more like 50 countries. But I don't know. Let's just hope that our country can get our act together and govern ourselves smoothly. Because right now, to your point, yeah, there's the difference, the dichotomy between red and blue is something that is certainly something that I have talked a lot about, and something that I think has the potential to further destabilize the trust in the U.S. dollar, in the U.S. markets, in the U.S. hegemony. I really do. So I don't know how to answer that other than to say it saddens me greatly, because we are not the United States at this point. We're a little bit more divided than I would like. So I don't know what it will take for us all to realize we're Americans, period, and stop putting us into different, pigeonholes and categories, and just simply say that we're all Americans. And that's the most important thing. That's the way it was when I was a kid, and doesn't seem to be that way anymore. So optimistic, sure, cautiously so, but doesn't mean that we're not in for kind of a bumpy ride till all of this plays out. Kind of like the fourth turning, if you will.
Yeah, I think that's happening in a lot of places around the world. My home country of Canada as well, UK, Germany. We're seeing a lot of crazy things happening in different parts
Isn't
of the world.
Canada one of the states of the United States yet?
Hopefully, it will be at some point after Greenland. That's the next.
Yeah.
That I don't think it's impossible that after if the U.S. takes Greenland, that Canada will be next. I mean, Alberta. A lot of Albertans want to secede. They're kind of the Texas of Canada in terms of their political leaning, and they produce most of Canada's revenue, I believe, with their oil and gas reserves. So that could be an interesting scenario. But it's an interesting world out there. And
Well,
tell us about Miles.
real quick, that's the interesting thing. Why do they want to secede? Because we make all the money and you all take it in form of taxes. We're out.
Yes.
But that's the point, right? It's like that's what socialism does. And it disincentivizes working really hard to, because you have to redistribute the wealth. So I don't know. And we got all these people here that seem to think socialism's a great thing. Maybe you could have a discussion with them, Jesse, and wake some people up in the mainstream, because that's kind of where we're heading. You got half the people that still embrace capitalism and what it can offer in the free market, and the other half just want the government to take care of everything, especially one that has defrauded in places like Minnesota and New York billions and billions and billions and billions of dollars. So I don't know. I don't know why I got on that topic, but again, I always love coming on your show, Jesse. I truly do. You're one of the good guys, maybe one of the best that I've ever met in this industry, and I thank you for constantly having me on. It's a pleasure, and like I say to you on every one of these shows when we leave off, first couple of beers are on me up in Vancouver.
Awesome. Well, tell us about Miles Franklin Precious Metals and the Miles Franklin Media YouTube channel.
So our YouTube channel just yesterday crossed 100,000 subscribers. Michelle McCory and I. It's Miles Franklin Media. Thank you for asking. As far as our precious metals company, the best way to get information or our price list that we don't publish but will be as good or better than anyone in the country, if you find better prices, let us know. We can typically match or beat. That's info, INFO, at milesfranklin.com. For that price list, of course, we have a website, but we only allow purchasing up to $10,000 for specific reasons. However, send us an email with any questions that you've heard here, questions on IRAs, whatever you want, or just you want the price list, no obligation, info, INFO, at milesfranklin.com. So thank you for allowing me to say that.
Great. In the description below will be a link to the YouTube channel as well as that email address, so you can reach out to Andy. As always, my friend, fantastic conversation. Looking forward to seeing you in Vancouver in a couple of weeks.
You're the man, Jess. You stay well, brother. I look forward to seeing you too. And until next time, stay well.
Thank you for joining us today. Our sponsor, ARC Silver Gold Osmium, has some great prices on silver bullion products. They are on your screen right now. These are subject to change and while supplies last, so reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And of course, pick up your Stack Silver Not Fiat t-shirt backed by a 100% quality guarantee using the link in the description below, and I will see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.